Welcome to Venture Unlocked. Today we are diving into a game changing funding option for founders, revenue based financing. It's flexible, non dilutive, and growing fast. But is it the right choice for your startup? Joining me is Parijat Garg, a lending expert with over 2 decades of experience in digital lending and consulting. We'll break down how RBF works, how it compares to traditional funding, and what founders needs to know before taking the leap. If you are looking for alternative ways to fuel your startup growth, the this episode is for you. Let's get started. Yes. Hi PG, how's you?
Yeah, all well. Thank you for having me here.
So, first of all, thanks to you to accept my invite to come for this conversation about this very interesting topic about a startup. So, what happened last week? I was talking to some of startup founders, and they are just talking about investing, their funding, and how they're managing their cash flows. And at that time, one seasoned founder told them about why not to try about revenue-based financing.
Hmm.
And that time some of the new founders, like they are in the founders position from last 2 to 3 years, and they are like they just raise their seed funds, and they are like, is it safe, and how we can attempt
Hmm.
for that thing. So that time I just researched about revenue based financing, and I know about two companies in India. They are doing revenue based financing, Recur Labs and Club.
Hmm.
And then I had a conversation with you, and you told that, yeah, let's talk about that. So today, as our conversation is going towards the revenue based financing, and for that I have you in my show, and you have 20 years of experience in digital lending and all, and let's explore this conversation together.
Sure, sure. Definitely, I'd love to speak about it. It's a thing that has picked up more recently in last 4 5 years, in globally as well as in India. And like you mentioned about few companies in India, there are several such companies in US and in European market. And they've been showing a lot of growth in this space. And as we go through the show, we can talk more about different aspects of revenue-based financing. So over to you.
So like I am also new to this thing, and I
Hmm.
just read about with
Hmm.
some of the articles, and in some aspect I know about it. So
Hmm.
can we put some more light about what is revenue based financing and how it's differ from that traditional financing? Like in which scenarios this thing will come, and like what is revenue based financing? First, we'll go with that thing, and like I think you can give a better example to understand about revenue based financing.
Okay. So revenue-based financing, as the name suggests, it is all about the revenue of the company, and based on that, the financing happens. Now, uh, like someone will ask, यार फाइनेंस तो रेवेन्यू देख के ही होता है तो रेवेन्यू बेस्ड फाइनेंसिंग नया क्या है इसमें
Yes.
um, so see, if we have to compare it to some other financing, so normally broad level पे देखेंगे तो दो टाइप की फाइनेंसिंग होती है. One is equity, second is debt, right? Now, equity, I think most people understand fairly well, right?
Yes.
And you go to angel investors, or you go to micro VCs, or you go to VCs, or you go to, like, when you're at a big scale, you can go to Ps and raise equity, right? And equity requires dilution of your stakes in the
Okay.
company, right? And the earlier stage companies dilute much more, like 20, 30, 35% in the first rounds. That's a pretty common norm. Now, for founders, equity is something they want to hold very sacrosanct to themselves. उनको एकदम पकड़ के रखना है कि नहीं, जितना कम डाइल्यूट करें उतना अच्छा है, right? At later stage में value create होगी, you will get more value for the same equity that you dilute.
Got it.
Now, to do that, alternate is to go for debt,
Got
right?
it.
Debt, in simple terms, is some form of loan,
Okay.
right? आपको किसी ने पैसा दिया है, आपको उसका पैसा मंथली चुकाना है, Correct? That is what debt is,
Got
essentially,
it.
right? Now, debt traditionally used to come from financial institutions, banks हो गए, NBFCs हो गए. These are like the companies which would actually give debt to someone, right?
Okay.
Now, वो होने के लिए difficulty क्या है उसमें कि most banks and non-banking companies have certain criteria that
Okay.
a business has to be at least say 2 to 3 years old, right? They must be having this kind of turnover. They may have to have some assets. So बहुत सारे banks and non-bank companies NBFCs बोलते हैं इंडिया में, they typically have decision factors which are asset based or balance sheet based.
Okay.
Now, most of the new age startups do not have assets. They do not have very strong balance sheet. Because आप early stage में हो तो you are investing in product, you are investing in team, you are investing in distribution, you are investing in acquiring new customers. So आप loss making हो, severely loss making हो, you would hardly have any strength in your balance sheet. Now,
Got it.
that's why typically like the traditional channels of lending becomes difficult for you to get, right?
Okay.
आप कुछ assets भी नहीं बनाए होते हो, you don't have any property, you don't have any hard assets. A lot of the software companies, a lot of the D2C companies, they are not having any factories of their own. They don't have any, say, land or any property to give as collateral. So वहाँ पे loan नहीं मिल सकता, right?
Okay.
Uh, the the second option within debt is venture debt,
Okay.
right? अब ना वेंचर डेट में क्या है कि वेंचर डेट उन्हीं को मिलता है जिनके पास में ऑलरेडी वीसी फंडेड है.
Okay.
अब वो चिकन एंड एग है, पहले वीसी फंड लूं फिर वेंचर डेट लूं या कैसे करूं,
It's a
राइट?
long step.
हाँ, तो पहले मैं वीसी लूं उसके बाद मैं वेंचर डेट लूं, यस पॉसिबल.
Yes.
बट अगर मुझे फर्स्ट स्टेज में ही वीसी अवॉइड करना है
Okay.
देन मैं क्या करूं,
Okay.
राइट? एंड दैट्स वेयर दिस कॉन्सेप्ट ऑफ आरबीएफ केम इनटू पिक्चर.
Okay.
So, like traditional lending, it looks at revenue, but it does not look at any assets or any kind of balance sheet. वो purely revenue पे देख रहा है, right?
Got
And
it.
अगर मैं बहुत simple सा example दूं, आप सबने शायद तुमने भी मैंने भी सबने Shark Tank देखा होगा,
Yeah.
right?
Yeah.
And Shark Tank इंडिया में अभी शुरू हुआ है, but Shark Tank in US has been running it for more than a decade now,
Yeah.
right? So Shark Tank US में do you know the name of the person who sits in the center?
No.
Like someone who looks like me, though I'm nowhere close to him. so, so his name is Kevin O'Leary.
Okay.
Okay, so he was the one who started with this making an offer. पहले जो Shark Tank का offer थे, they were all equity based,
Okay.
right? अभी इंडिया में भी आपने अगर देखा होगा तो recent सारे offers में you would have heard of this term called royalty.
Yes, royalty.
करेक्ट. तो क्या करते हैं कि अगर आपका बिजनेस अच्छा है,
Yeah.
आपको 1 करोड़ रुपए चाहिए, तो शार्क ऑफर्स सेइंग ओके आई विल गिव यू से 50 लाख इन इक्विटी एंड 50 लाख इन डेट, जिसमें आप मुझे रॉयल्टी के फॉर्म में रिटर्न करोगे.
Got it.
करेक्ट. सो एसेंशियली आरबीएफ इज नथिंग बट एक्सटेंशन ऑफ दैट.
Okay.
कि आपको मैंने लोन दिया, आप अपने हर प्रोडक्ट के सेल्स में एक सर्टेन परसेंटेज मुझे रिटर्न करोगे एज अ
Okay.
लोन रीपेमेंट.
Okay.
ओके, तो अगर मैंने आपको 1 करोड़ का लोन दिया तो मुझे आपका अगर हर प्रोडक्ट में मैं बोलता हूँ कि मुझे आपको 10% हर प्रोडक्ट की सेल में मुझे वापस करना है. तो अगर आपका
Yes.
प्रोडक्ट से 100 रुपए का है तो 10 रुपए हर प्रोडक्ट की सेल पे यू विल बी रिटर्निंग टू मी,
Got
राइट?
it.
एंड हियर द इंपॉर्टेंट थिंग इज दैट हाउ डू यू कैलकुलेट द इंटरेस्ट, बिकॉज लोन है तो देयर हैज टू बी एन इंटरेस्ट, राइट?
Yes.
सो दैट 1 करोड़ like I will recover this money till the time it is you repay me 1.5 crore or you repay me 2 crores. That is how the deal happens in Shark Tank. Very similarly in RBF, the deal is that if you have a certain requirement, I will give you that money, but that money has to be returned to me as a certain percentage of your monthly revenue, which could be say 5 to 10%,
Okay.
and it has to be returned up till I recover X 1.5x or 2x of the money that I've given to you.
Got it.
So that is what RBF means, right?
Okay. So, like, if we talk about the startup who are at early stage and they are in the pre-revenue stage, so for them it's not an option anyway. And if they are at
Pre-revenue the option in here because this is revenue-based financing. So
revenue
you
based,
have to be revenue generating.
got it. And when any startup is achieving any kind of revenue that will be in any scale, and so like at any scale, when you're talking about any scale, what should be the scale? At that scale, startup founders are applying for revenue based financing. Like what will be the ground line for them? uh, After that they are eligible for revenue based financing, and in that stage what all are the alternative option for them? So and in that option, like revenue based financing also one of those. So what should be that one?
Hmm. So, uh, see, revenue-based financing, because it's going to be a certain percentage of your revenue. So इसमें दो तीन factors हैं. So
Okay.
my ARR, annualized revenue that I get
Okay.
is suppose 1 crore, right?
Okay.
Now, typically the loan amount or the debt amount that I can get, the financing amount that I can get is usually 20 to 40% of that amount, not more than that. So basically, it will range in that bracket. So if my ARR is 1 crore, then I'm going to get somewhere between 20 to 40 lakhs. Now, that will obviously depend on the assessments and other things and the nature of my business, but that is where I will play, right?
Okay.
So I would say that that is like a bare minimum threshold for someone to apply for RBF, because if my revenue turnover is like say 20 lakhs only, then what I will get is just 20% of that, which is say maybe 4 lakhs, which is not going to be substantial enough.
Got it.
Right? So अगर मेरा 70-75 लाख का टर्नओवर है या ARR है या फिर 1 करोड़ का ARR है, then if I'm able to get at least 20% of it, which is 20 lakhs, then it is reasonably substantial for a business to help scale up. So
Got it.
critical part with RBF is that this money is given for growth capital.
Okay.
So what we mean by growth capital is that a company which is trying to grow fast, right,
Got it.
and needs money to continue that growth. So this money I will take and deploy in my growth journeys, right? That
Got
could
it.
mean that I want to invest in marketing. That could mean that I want to invest in my sales and distribution, because that is what will give me the growth, right? So that is where a lot of this money would typically go into.
Okay. So, like, as this industry is also growing with as a startup is growing in India, so what are the growth trend of this industry in India, and who all are the players apart from the name I took for the revenue based financing? And apart from revenue based financing, what are the alternative things they are offering that kind of cross sell for them, and
Hmm.
how they are generating revenue by giving revenue to the startup?
Hmm. Hmm. So, so I think, like at least I don't have any numbers for RBF market in India.
Okay.
But globally, the numbers that I read on the internet and through some studies, it's like as of last year, it was touching nearly $3 billion or maybe slightly more than that, right?
Okay.
And the expectation is that maybe 2033 or so, which is like another 10 years from now, this can go up to nearly $180 billion.
Nice.
And it has been growing rapidly. Like there's definitely a growth that's coming in through this. Now, the reasons why the growth is coming into this space is because there are a lot of new enterprises that are coming in, and new enterprises need to grow faster, and they have this aspiration to grow faster. And RBF is, you can imagine this to be like an on tap finance that is available to you. अगर हम like typically कोई भी और process में देखें any other form of money that you can raise, it takes time. If you go to a bank or an NBFC, typically it may take 3 to 7 days, at times maybe 15 days for you to get a loan. Right? If you go for a venture debt, maybe another 15 to 20 days is typically the time that you will take to get money.
Got it.
If you are looking at venture capital, like you're raising equity, we all have heard situations that it takes anywhere between 3 to 6 months, or even 9 months or 12 months to raise equity. Now that's a long process. Now, RBF typically is based on very minimal set of information,
Got
and that minimum set of information is usually available with the founder, and the founder is able to offer that all of that very easily to the any RBF provider.
okay.
Now, with that, the way to offer credit is much easier. Money is into your bank account, and then as soon as you finish your RBF line, you can upgrade it or you can take another line for it. So that kind of cyclicity is much easier when you look at RBF, and that's why RBF is becoming more popular these days.
Okay. So, just question arise from the answer you told. So, when any startup is applying for revenue-based financing, so what all are the validation or checks any revenue-based financing firm they are doing? And like as you told, it's just a fastest way to get money to the startup. So,
Correct.
what all are the validations they are doing as a firm? And in that process, what all are the roles that come in the scenario to deal with founders? So from the
Hmm.
founder side, who all are the person required for raise the revenue based financing requirement, and from the other side, from the RBF firm, who all are the person they come in the scenario to uh, check all the things are appropriate or not? So
Hmm.
what
Hmm.
should be?
So typically, say from the company which is looking to take money, founder and maybe somebody from finance, they are the usual people who are required um, just to provide all the documents, information, and confirmation around the RBF deal itself. On the RBF side, typically there would be maybe an account manager or some sort of a salesperson who would explain how the mechanics of the entire RBF works, um, help coordinate the entire transaction. Then there will be someone from the credit team who will do the assessment and understand whether this is a doable transaction, what kind of money can be given, what kind of rates are to be offered. I think there could be like a ops person that might be involved who would help in executing this transaction, which means that paperwork and setting up the flow of money, right?
Got it.
So in RBF, the critical parts here is that you have to provide your revenue run rate,
Okay.
for which you will have to provide your financial statement, your bank statement to prove that, okay, you have such a run rate that's coming through, right?
Got it.
Uh, and obviously, you have to provide your KYC, know your customer details. Like in India, it would be PAN details of promoter and possibly the company to understand, like, and establish that this is a true company. And these are like the primary details that help you get started.
Okay.
GST is also something that some of the RBF companies ask for, because that's something which again indicates your run rate and understanding of your margins. So, once this is provided, then an RBF company will do the evaluation. And
Okay.
typically based on, like I said, the function is based on how much revenue you make and whether you have a predictable revenue coming in. So if there are companies which do project-based businesses, for example, if I am a software services company, I do projects. तो ऐसा हो सकता है कि मैं एक महीने में मेरी 50 लाख की बिलिंग हो
Okay.
और नेक्स्ट 3-4 महीने में कोई और बिलिंग नहीं हो बिकॉज आई डोंट हैव एनी प्रोजेक्ट.
Okay.
Then that is not the right fit for RBF.
Okay.
The right fit for RBF is someone who has a like a
Clean
repeatable or
revenue.
a predictable recurring revenue in a way, right? So
Okay.
it could be like the great companies could be the SaaS companies, software as a service companies who have recurring revenue,
Subscription
right?
cycles for their revenue.
Subscription cycle for everyone, right?
Okay.
Or it could be software companies also, or like a B2B companies also, which have recurring businesses, like say for logistics company, which may have B2B
Yeah, they
contracts
have
and then they have recurring businesses coming through, right? Or you could have D2C e-commerce platforms because they have recurring business
every day they
coming
are
through.
generating revenue from.
Every day they are generating revenue, right? So
Got it.
there's a pattern to that, and usually these companies are growing, right? E-commerce companies आप देखोगे तो they grow very rapidly.
Yeah,
Now
exactly.
उनके लिए तो मार्केटिंग में पैसा डालना है, they have to constantly grow, right?
Got
तो
it.
आरबीएफ का एडवांटेज कहाँ आता है कि मुझे इक्विटी रेज करनी है नेक्स्ट ईयर,
Okay.
एंड टिपिकली इक्विटी में क्या होता है कि देयर आर मिनिमम थ्रेशोल्ड्स. Many VCs will say that I need minimum 30 lakh MRR, right? Somebody will say I need 50 lakh or 1 crore MRR, right? अभी वहां तक पहुंचने के लिए just bootstrapping may not help.
Yeah,
So
exactly.
I need some capital to reach that level. उसके बाद मुझे VC fund मिल जाएगा.
Got
But
it.
to bridge that gap, then this can become like a very good uh, source of capital.
Got it.
और ये source of capital मुझे आता है, it helps me grow my business. So
Got
the
it.
real benefit is that it is coming to grow the business and it is linked to my cash flow. So यहाँ पे ब्यूटी एक और चीज की है कि बाकी कोई भी फॉर्म में अगर आप बैंक डेट देखोगे या वेंचर डेट देखोगे, मोस्टली देयर आर फिक्स्ड रीपेमेंट शेड्यूल्स.
Okay.
मतलब मैंने अगर लोन लिया तो मुझे इतनी ईएमआई भरनी है. करेक्ट. अभी मेरा सीजनल बिजनेस हो सकता है, राइट? इफ आई एम ए D2C कॉमर्स बिजनेस, then maybe during festival time, so if I sell clothes, right? And then clothes mein mera businesses would go up during festival time, during marriage season, during gifting season. बाकी टाइम में थोड़ा फ्लैट चलेगा,
Yeah.
राइट? अभी क्या है कि मेरी ईएमआई तो फिक्स्ड है.
Okay.
So in a month I made 60 lakh rupees, then also my EMI is fixed. Another month I made 10 lakh rupees, then also my EMI is fixed,
Got it.
right? Whereas in RBF, this is linked to my MRR.
Okay.
इस मंथ मैंने अगर इस मंथ मेरा जो भी मंथली रेवेन्यू हुआ, if it is like 60 lakh and 10% is supposed to be paid, then it will be, I'll pay 6 lakh. Next month it is 10 lakhs is my revenue, then I will pay only 1 lakh.
Got it.
So it is linked. So मेरे लिए as a founder, it is not that challenging because it's linked to my incoming revenue. So मेरा revenue ऊपर जाता है 60 लाख की जगह पे 1 crore होता है, then I pay more. If it comes down, I pay less. So I am not worried about managing that EMI irrespective of how my market is performing.
Got it. Got it. So, like, just uh, concluding some of the main points that we talked
Hmm.
till now. So for take the revenue based financing, company has to be little old, so they have some level of revenue.
Correct.
Second thing, if company is a digital company or like they don't have any physical assets, so at that time they will not get the loan from bank or anything. Like for the office space, these days are more coming from it's a rental spaces. So
Correct.
that time, if they want any debt funds, so at that time, revenue based financing is the thing for them. And third thing is why people are taking it, like it take very less time to credit in their account. And the fourth thing is, like as you told, uh, like if their revenue, like every month, if is a change of figures in their revenue, it will not affect. So as per the revenue they are doing this month
So it's
from.
cash flow linked in a
Yeah.
way. It's a cash flow linked in a way.
Yeah.
Correct.
So my
Hmm.
next question come from the cash flow side. So when they're going for the equity funds and to the VCs, so is there any challenges in the cash flow they are going to see? Like just because VCs are taking care of, like they will see each and every financial statement when they are
Correct.
going for funds. So
Correct.
as they took revenue based financing 1 year back, and in the next year they are going for equity funds. So in their cash flow and their financial statement, any like any mark is there that will hampering their valuation and all, or anything?
No, not really. I think, on the contrary, I believe that VC will see it as a smart move,
Okay.
that you took capital to raise your or like to grow faster, right?
Got it.
Because, like I mentioned, most of several VCs have a minimum threshold of either MRR or ARR for them to even consider a company for their investment assessments.
Got
So,
it.
for like a early stage company, it is important that they reach those thresholds
Okay.
uh, before they go to VC. And that threshold also helps. Like, so once I took this RBF perhaps and grew to a certain level, and if I'm able to sustain that level or I'm able to grow from that level, a VC gets more comfort that there is a product market fit. As a D2C company, there is a sustenance of repeatable revenue. I'm able to hold the customers. The customers are churning, but there is a certain percentage of repeat customers. The maybe the average basket value is going up. So there could be many factors that you might be able to prove by using this capital, which otherwise is are maybe statements on paper, but there are no proofs of like a proof of concepts there, right? So now
Got
the POC is done, a strong POC is done, at a scale using this RBF kind of infusion. And it is not necessarily that you take it only that time. You can take it even after you have raised equity rounds. Because
Okay,
equity rounds are typically to fund your capital investments,
got
to
it.
build the teams, to grow the product. But RBF is suited for growth.
Got
So maybe I will say maybe I diluted my equity and raised maybe $1 million. Now once that money comes in, I'll have to hire a team. I'll have to maybe invest in better tech. I will have to maybe innovate on a product, introduce maybe variations of my product, introduce new features, whatever is required. Now while I'm doing that, I still need to maintain growth in
got
terms
it.
of marketing, in terms of sales expenses, and all of that. And that is where RBF can also work in parallel.
So in simply we can say to boost daily operation of any startup, if they need any kind of fund, so RBF will be the one of the great option for them. And
Absolutely.
if they want to uh, expand something, like if they want to expand their dark houses in terms of quick commerce, if they want to grow their teams in terms of early age startup, so at that time they want to go for VC. But when they're going for VC, they are looking for good revenue, and for raising good funds, they want revenue at good scale. And for that, if they need growth support, so revenue based financing is a thing for them.
Correct. Correct. Absolutely. Absolutely.
Yeah.
And
So
also one important thing that I would like to highlight here is that this is like when an assessment is happening
yeah.
for a company which is suited for RBF.
Okay.
Another important factor is the gross margin that company has. Most
Okay.
of the early stage companies might be loss making,
Yeah.
which is why they don't typically get attention from banks and the traditional lenders. Now, RBF looks at gross margin
Okay.
because अगर आप 100 रुपए का प्रोडक्ट बेच रहे हो और उसमें आपका से 60% का ग्रॉस मार्जिन है, so then
Okay.
you might be able to give me 10%.
Yes.
अगर आप 100 रुपए का प्रोडक्ट बेच रहे हो उसमें ग्रॉस मार्जिन आपका 20 है, तो उसमें से आप मुझे 10 कहाँ निकाल के दे पाओगे?
Exactly.
Right? So,
Exactly.
so if you again taking the example of Shark Tank, तो अगर आप देखोगे तो जो जो Shark Tank में रॉयल्टी वाले ऑफर्स आते हैं, they come to any pitcher who's having that kind of a margin. So as
Got
soon as that margin is available, you can see twinkle in Shark's eyes. कि अरे, this is a loyalty deal.
yes.
And they see it as safe deal, right? Because मेरा पैसा वापस आ रहा है at a certain multiple. So it's always great.
It's a win-win scenario for both of them.
It's a win-win
So
scenario.
like just like as we talked about financing and all this thing, so is there any kind of low cap, like till like what was the fund size at the time of revenue based financing?
Hmm.
Startup will think of like what was the maximum limit and what will the minimum limit in terms of revenue based financing,
Hmm.
and like how is it works, like the amount is set from the RBF firms,
Correct.
how it defines, like what was the parameter to fix, like we are able to give them this much fund, so
Hmm.
how this will work in these scenarios?
Hmm. So like I mentioned, typically the amount is a function of the revenue,
Yeah.
right? ARR or like similar kind of metric. And 20 to 40% is a fair range of what you can look at, right?
Okay, so if you're
Uh,
taking an example of one firm who is doing the revenue of 3 crores as a yearly revenue, and
Correct,
they want to go for raise the funds in next 8 months, and
correct,
to grow their operations, they want RBF support. So
correct,
in this scenario, what was the minimum limit of fund they will get from RBF firm, and what will be the maximum limit they will get? And to get the maximum to get the to get the maximum amount, what all are the things RBF firm will be required? What all are the fixed parameters they are looking before fixing the amount to give it to them?
correct. So here, I think like if the 3 crores is say the ARR in a way,
Yeah.
then like I mentioned, 20 to 40% would be the typical
Yes.
range. Now, looking at that, anywhere between say 50, 60 lakh rupees could be the minimum sort of available fund, and it can go up to possibly somewhere close to 1.2 CR or so, right? So somewhere in between is what one can expect. Now,
Got it.
now it will depend on what kind of gross margins the business
Okay.
has,
Gross
right?
margin.
If the business already has taken some loans,
Okay.
because that is also possible that I may have taken loan from one RBF company, now I'm going to another RBF company. So already like part of my revenue is blocked with an RBF company. So what can I do there? So that could also be a possibility. Or maybe I've taken like through some private means, I've taken some loan or some capital which I need to repay. So someone needs to understand that. Then the other kind of metrics, depending on the type of business, right? Say for example, if it is a SaaS company, then you look at what kind of subscriptions are there,
Okay.
what is the repeat levels of those subscriptions, what is the churn rate there,
Okay.
what is the attrition rate there. So that's the kind of metric that someone needs to understand about the business itself.
Got
If
it.
it is a D2C e-commerce company, what kind of RTO is there? What is the average basket value? Are there any seasonal businesses, seasonal months where the businesses go up really well? So all of that needs to be understood by the RBF company, and based on that, they create a structure around it. Now, this is obviously like a dialogue. It is not one-sided, where founder also specifies what is the money that is required, how they plan to use the money, and how this money can be then deployed, right? And there are different companies which have also created niches there. Like one of the companies that you mentioned operating in India in the RBF space, they typically want to directly link this money for marketing spends. So they
Okay.
try to understand the ROAS of the business. What
Yeah.
is the return on ad spend,
Okay.
right? Because if that is not effective or not healthy, then they may fund less. If it is very healthy, very, very efficient, then they may fund more that kind of business. So they ask the business to link their Meta accounts or Google accounts so that they can understand their efficiencies of their campaigns. And based on that, they can fund their spends on Meta or Google. So, so that is one style of doing business or providing RBF. There are other styles which are more open-ended, where you
Mm.
take the money into your account and then you use based on how you want to use, and we will just collect the money as per a percentage that we have defined between us.
Got it. Got it. So just taking a persona of RBF company and
Hmm.
taking an example of a D2C firm.
Hmm.
So if a D2C firm performs well, they will get their money back.
Correct.
But if in some scenario, like that sale is going very bad and like after that company is going to shut down, and
Correct.
in that case, what will be the scenario for RBF company and how they're handling it, how they're handling this thing? Just
Hmm.
because in India, if we took the data of last year, every 3 months we have around more than hundreds D2C brand. They are they are just going to ramp up their operations and all. And I think for to keep the stock keeping unit and making the SKU more better, or as you told, ad spends and all, these are the major things. And for
Correct.
these of the purpose, like if any trend is coming in the market, they want to they want that they want the trends in their site, and for that they want to procure more, and for the procurement they need RBF
Capital.
kind of
Hmm.
funds.
Hmm.
But
Hmm.
sales going like pretty bad after Diwali and anything
Hmm.
related to
Hmm.
that. Any so in that case, and if anything bad happen, how RBF company will recover that thing, and what was the parameters for that thing?
Hmm. So, say RBF is unsecured, so there is no
Yeah.
security linked, right?
Okay.
So if a business truly goes down, which was funded by RBF, then RBF does not have any way to recover that money,
Okay.
right? Um, and that's the risk that an RBF company runs with, and which is where the credit assessment happens, right? Which is why it is important for an RBF underwriter to understand exactly the nature of business, what is the trend of the business, how it has happened in
Okay.
the past. Is there a seasonality? Like, are there certain months which do well in this kind of business? If it is an ed tech company, possibly there are certain months, like say summer holidays or start of the academic year is when the most sales will happen. If it is a fashion brand company, then possibly during festival seasons, the sales would happen higher. So there are different kind of assessments that happen around that. Now, and all scenarios can happen, right? As a credit underwriter in an RBF, I would have imagined that this company will be able to pay the money in next 12 months. That was my assumption. But if the company does well, it is possible that I get my money back in 6 months. Because
Okay.
if the company does really well in terms of growth, then who knows? I will get money much faster, right?
Got it.
It is possible that I get the money in 12 months. My assessment was great, and the company does on an average. And like you said, the company can also do worse because I had assessed that the company will pay me in 6 months, but because of certain market situations or the way that the business was run, even after 12 months, I've not got my money back. So the idea here is that that is where the assessment happens, and if something goes bad, RBF company cannot recover um, directly. There's no security that is given. Of course, like they can follow up, make sure that if the business does well next year, if not this year, then the money comes back. It may be delayed but not denied. But if the business shuts down completely, then there is no way to recover the money.
Okay. So, like, just take one more scenario, kind of happy case scenario in this thing.
Mm.
So, as we talked about one startup, 1 year went bad. Second year they recovered, and in next 8 months they want to go for their next round of funding. That should
Mm.
be seed round or kind of Series A round.
Mm.
So, when any valuation is happening from the VC end, so at that time, are they connecting any kind of RBF guys? They gave fund to them, and if they are talking about that company, so what kind of conversation happened between them, and is that hampering the startup funding round? क्योंकि ये जो बीच की कन्वर्शन होगी उसमें काफी चीजें पता चलेगी, लाइक हाउ दे परफॉर्म इन द पास्ट एंड हाउ दे डिड, उनकी डिप हुई थी या फिर कैसे हुआ था, तो
Mm.
ऐसा कुछ कन्वर्सेशन होता है इनके बीच में?
No, I don't think so because see, if the business had gone down for the startup itself, then वो उनके documents में, उनके data में, उनके statements में anyways दिख जाएगा.
ओके.
So a VC need not really speak to an RBF team as such, right?
ओके.
हाँ, documents में दिखेगा कि there was an RBF facility that was used by this startup,
ओके.
and if despite that the growth did not come, which
ओके.
means that this company or this founders were not able to use the capital effectively. So then that may be negative. But अगर आपने RBF की funding ली और उससे आपने एक certain level of growth achieve किया, suppose you were growing by 10% earlier, by using RBF funding, you were able to grow by say 15-20%. Now, if that growth is justified using the funds, then founder has actually a legitimate ask for the VC as well, that आप पैसा डालोगे तो I will grow better because you can see that मेरे को पहले capital मिली, I grow. If you give
गॉट
me
इट.
more capital, I will grow faster. So I think it is going to work positively. Unless you have, like as a founder, you are not able to manage that fund and you are not able to show growth, which is unlikely. I think usually you would find these kind of marriages happen only when founder has that vision to grow, उनका business में दम है, and RBF को वो दम दिख रहा है, तभी वो fund करेंगे.
गॉट
So
इट.
more often than not, this should show like a positive outcome. So जैसे I remember like some examples of some deals that I'd seen closely. There was this HR software SaaS company, right?
ओके.
And their clients are small enterprises or small companies, SMEs, who take this HR software for payroll management, for all the HR kind of services within their own organization. तब उनके there's a package, right? There's a package on which the HRMS solutions are sold. And एक बार आपने HRMS integrate कर लिया तो it will be at least for 3 years, 5 years, and the company will keep using that
Exactly.
HRMS service, right? So आपका predictable revenue create हो गया, right?
यस.
It's a SaaS business, so it's a high gross margin business. Very clearly कि आपको दिख रहा है कि हाँ high gross margin है. Now you need capital because आपको maybe कुछ ना कुछ growth करनी है, कुछ marketing करनी है. At times you want to expand to different markets, different industry segments. So जो भी आपको कुछ करना है तो उसके लिए you take this money, you pledge your revenue against it, and जो भी वहां से revenue आ रहा है उसका एक certain percentage will keep going. And so what you're doing is essentially आपके future revenue के against you're taking money today,
गॉट इट.
right? तो अगर मुझे फ्यूचर में 1 करोड़ आने वाला है, उसकी जगह पे आज मुझे 30 lakhs मिल गया, या मुझे फ्यूचर में 10 करोड़ आने वाला है, उसकी जगह पे मुझे आज 2-3 करोड़ मिल गया, दैट इज एडवांटेज. एंड देन जो फ्यूचर में आएगा वो उसमें से आप पोर्शन ले लो, दैट इज फाइन, बट एटलीस्ट आई गेट दिस मनी एंड देन आई एम एबल टू यूज दिस मनी.
Got it. Got it. So, like, there are some more questions that I have in my mind. So, like, as per the conversation, what I understand is if you have revenue, you can use RBF. But there are some any kind of business, their RBF is not not giving funds. So, is there any kind of business you have in mind? Their RBF is not valid for that, and not RBF companies are not giving business to that kind of business ideas.
हाँ, तो जैसे मैंने एक एग्जांपल पहले दिया था कि जैसे प्रोजेक्ट बेस्ड रेवेन्यू जहाँ पर है,
Okay.
राइट.
Okay.
अगर मेरा प्रोजेक्ट बेस्ड रेवेन्यू है तो थोड़ा सा मतलब अनसर्टेन रहेगा, राइट.
Got it.
या फिर मैं ट्रेडिंग बिजनेस में हूँ, लाइक
Okay.
वेयर व्हाट आई डू इज लाइक आई जस्ट कहीं से मुझे ऑर्डर आता है, वो उसके हिसाब से आई परचेज, लाइक सपोज एग्री प्रोडक्ट है, राइट, फॉर एग्जांपल. सो लाइक आई गेट ऑर्डर ऑफ say 1,000 kilo of wheat. I go and go to mandi, find sellers, वहां से माल खरीद के दे देता हूँ. Now
Got
in
it.
this case what will happen is I am generating revenue, but my revenue is not predictable enough, right? मतलब बहुत
Yes.
randomized होगा, and it could be like having a lot of spikes in it. It's not distributed revenue in a
Got it.
way, right? और फिर इसमें एक और जो चैलेंज है कि मैं बिजनेस किस तरीके कर रहा हूँ. जैसे अगर मैं एग्री प्रोड्यूस में हूँ तो मे बी देयर इज अ पेरिशेबिलिटी दैट विल आल्सो कम इनटू पिक्चर. सो देयर आर सर्टेन फैक्टर्स ऑफ दिस नेचर दैट विल कम इन. सो इसीलिए टिपिकली D2C businesses, e-commerce businesses, SaaS businesses, यहाँ
Logistics.
पे हाँ लॉजिस्टिक सर्विसेज बिजनेसेस विच हैव longer
Recurring
like
revenues.
established recurring revenue form of consistent revenue that's coming in. तो इस
Okay.
टाइप के कोई भी कंपनी से उनके लिए सुटेबल है, जहाँ पे मार्जिन भी ठीक है और थोड़ी सी एक स्टिकीनेस है कस्टमर की, एक आपको थोड़ा विजन दिख रहा है कि आपको आगे मिलेगा पैसा.
Got it. Got it. So, what was the last thing came in mind is like if founder is looking for funds and they don't want to go for RBF for now. So, what was the alternative? Is there anything in the market?
So alternative is either you go for equity round, right? Like अगर आप बहुत early
Yeah.
stage हो तो angel या micro VC करोगे, right?
Okay.
Or you go for family friend sort of rounds, right? Or you can take
Okay.
loans from family friends in a way, right? You can go to unorganized market, take loans, but those are like very very expensive, right? बहुत difficult
Interest
है.
rates.
Interest rate भी है, terms भी बहुत difficult हैं. Dealing with those shady characters could also be very challenging. Typically banks या formal system इतना आसानी से loan देता नहीं है unless you are like say 2 to 3 years into like running the business, एक certain level of threshold है, बहुत ज़्यादा severe loss making है, तो then also it becomes very difficult to take loans. Loans मिलते भी हैं तो quantum बहुत कम मिलता है, मतलब अगर आपका 3-4 करोड़ का turnover है, तो आपको लोन जो है वो शायद हो सकता है कि 30 लाख 25 लाख ही मिले, जो कि
Okay.
आरबीएफ में 3 करोड़ के लोन पे 3 करोड़ के एआरआर पे यू माइट बी एबल टू गेट इवन 50 लाख 60 लाख लोन, जो कि यहाँ पे थोड़ा डिफिकल्ट हो जाता है.
Got
तो
it.
उस तरीके के चैलेंजेस हैं कि लोन मिलना इज लिटिल डिफिकल्ट. So the only option is for you to dilute your equity typically, and when
Got
you have to dilute your equity, then that is where the थोड़ा दिल पे हाथ रख के फाउंडर को करना पड़ता है कि नहीं अच्छा ले लेते हैं, ठीक है. और
it.
मतलब ठीक है चलो इक्विटी डाइल्यूट करना शायद इतनी दिक्कत भी बात नहीं हो, पर सबसे ज्यादा चैलेंज है कि उसमें टाइम बहुत लगता है कि
Okay.
फाउंडर जो है वो बिजनेस में फोकस करे या फंड रेजिंग में फोकस करे.
Exactly.
और अगर सिंगल फाउंडर है तो और भी डिफिकल्ट है बिकॉज फंड रेजिंग इट सेल्फ इज अ फुल टाइम जॉब,
Exactly.
राइट. तो अगर 3-4 फाउंडर्स हैं तो क्या होता है कि ठीक है एक फाउंडर लग जाता है फंड रेजिंग के पीछे, 3 फाउंडर बिजनेस चला रहे होते हैं, तो आप मैनेज कर सकते हो. बट एक फाउंडर है या 2 फाउंडर है तो बहुत डिफिकल्ट है. Recently,
Got
I
it.
was talking to like a person, like single founder company, D2C brand, and she is struggling to raise capital because अब वो इधर कितना फोकस करें उधर कितना फोकस करें, and you need money
Exactly.
to grow. so so RBF में एडवांटेज है कि ऑन टैप है, आपने एक बार ले लिया, डेटा शेयर कर लिया, फटाफट आपको आ गया, then you are focused on growth.
Exactly.
So and once you grow to a certain level, yes, you can go for equity rounds. I'm not saying that it is these are substitutes for each other. But RBF is great as a bridge product. RBF is great for providing you that growth capital, and it can be there even before you take a equity round, even or after you take the equity round. Both places it has value
got it.
depending on what you need for, right? But दोनों की अपनी अपनी importance है, दोनों both avenues are important.
Got it. Got it. Nice. So we got to know about RBF and what was the consequences of taking it, how we are using it, how we can raise that thing. So before closing this conversation, I just want to make you highlight about what was the takeaways. If we can talk about 5 steps. So what should be? Hello.
Hi, can you hear me?
Yes. 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 Yeah. So
Okay.
So before closing this episode, just want to talk about like so as we covered all that thing. So if anyone is looking for a playbook to go for revenue based financing, from where they can read about it to learn more about that thing, and what are the 5 key takeaways for revenue based financing?
Okay. So, see, I think I would say that one, there are few companies like if you're a global player, if you're already operating in US market, there are companies there like Clearco, CapChase. These are kind of companies which are operating in the US market, and they can look at your US revenues and give you credit around that. So that's one
Okay.
option that you have. If you're operating in the Indian market, some of the names that you mentioned, like a Club, Velocity, GetVantage, um, uh, Club with a K, these are the companies which deal in revenue-based financing. So you can approach any of them and they should be able to give you a very quick assessment of what is possible. And there's no money required at that point in time of assessment. So you're not actually committing to anything. And if you like what they are offering, then go for it.
Got it.
So I think, and there are enough enough articles and blogs on the internet. You can read about them. But I would say that like you go through that process, because once you go through the process, you get exact nitty-gritties of what it is and what are the exact terms and conditions that will get applied.
Got it.
Now, in terms of, I would say, what are the important aspects of RBF? One is that it is linked to your cash flow. So the advantage is that as your cash flow moves, you make the payment. There's no fixed payment coming in. So that's one
Got it.
major advantage of taking this form of capital. Second is you're not diluting any equity. You're not giving any kind of financial covenant. You are it's completely unsecured. So you have a lot of comfort in terms of getting into these kind of transactions. It's purely against your future revenues. So that's the second
Got it.
important aspect. The third one is this, it can be done very fast. So it's like quick assessment and quick money in your account. So it's more on tap sort of credit. And once you get associated with an RBF company, getting second line, third line upgrades is much easier. So once you get associated, it's easy for you to work with them and get the next lines access. So these are like I think I would say the important aspects. Fourth one is it's suitable for any business which is having more of predictable revenues coming in. So whether it's D2C, e-commerce, brands, SaaS companies, and you have to have a decent gross margin. So I would say these are like 5 important aspects one need to remember if one wants to try out RBF. So if I have to summarize RBF, then I'll say RBF, revenue-based financing, and we can actually say that R is that it is really helping you reserve your equity, protect your equity,
Yes.
right? B is that it is booster for your growth. So take that money, grow your business. And F is that it provides you flexibility of repayment and getting the money on tap at any point in time. So I would say that's how you should remember RBF, not as revenue-based financing. That's too basic.
Exactly. That's great thing. So this rename of RBF will be easy for the listeners to understand why RBF is required and why they have to take it.
Sure.
So thanks PG for this insightful conversation about RBF. Hope to see you in next discussion about anything that if I have any curiosity and that match with your expertise, definitely will connect again for this thing.
Absolutely. It was great to be here. Thank you very much for having me, and all the very best to you. I hope we could add a lot of value to your audience.
Thanks.
Okay. All right. Thank you.